Very good evening, everyone. Charles here, further on Daily Chart Analysis, Tuesday, the 21st of April, 2026. The time has just ticked past 9 o'clock local here in Milan. And we are just cleaning up the day, to be honest. Just about to journal the trades and why not make a video about how the day went? So it was pretty much a steady day, to be honest. The bias flip-flopped quite a little bit. Let's begin by starting with the analysis of the day in the morning. So potentially scoping at AU shorts, EU potential shorts. EG, I was looking at that long. US dollar CAD, I was looking at longs as well. GU looking at shorts. GCAD looking at longs, and the DXY. Well, I was hoping for a break above an area, pull back into an area of interest, of which could have created that break, and then looking to use that confluence across the cross pairs. So, what did I end up doing today? Well, let's talk about EG. I am still currently in a long position on EG. To be fair, I probably should have talking about this second or even third, to be fair. But the fact of the matter is I'm in a long position on EG as per the daily chart analysis. I figured the long position made a lot of sense, potentially, or even in addition, I should say, as a result of anticipating that pound weakness, i.e. the DXY strength coming in, and forecasting that the euro was slightly stronger than the pound based on the reaction, or even based on how we're viewing the pound or GU and EU. I'm seeing personally a lot less reaction to the DXY strength as I'm getting from GU. As a result of, even for good example, last week we saw EU push up through some solid areas of interest where we were looking to take shorts from. However, GU, on the other hand, it didn't. It actually respected those points of interest, which for me suggests that EU is stronger. And by trading the cross between EG, then I figured, well, if we still have that bias present in the market, then the euro should go up against the pound. And considering I was looking at shorting the pound, it made quite good sense to look at longing EG using the weakness from the pound and then forecasting that strength, albeit slight, better than the pound coming in from the euro. So it is what it is at the moment. I'm in that position as per the forecast, coming into session lows, breaking the liquidity that was evident in and around those areas. You can see in my pound signs here by way of double bottom, triple bottoms. I don't use those in terms of support and resistance. I'm not looking for long positions from double bottoms. I'm actually expecting quite the inverse. I'm expecting price to crash down through those areas. And if I bring that 15-minute time frame slightly larger for you all, you can look to see how I'm using that across the chart to understand where is price likely to go. So we can see here double bottoms, triple bottoms, quadruple bottoms, and not looking to find, let's say, for example, an order block in and around these areas to look for price to go to the highs. I'm expecting price to find the liquidity below those areas and look for those order blocks underneath them, and come to the conclusion today that we have much of the same by way of a double bottom, triple bottom, whatever you'd like to call it, in and around these areas. So I'm saying to myself, well, don't so much look for a long position from here, simply because we have had a snap of Asia, even a snap of most recent highs, a pullback potentially into the area that caused a snap. Looking for that? No, quite the opposite. As I say, wait for price to break that area first. Understand, is there an area of liquidity by way of order block, or i.e. session low, for me to look for an entry? And I had a very aggressive 1 minute break of structure from that area, and I believe I used the 5-minute order block as a result of that 1 minute break to take the long. So I'm still in this at the moment. I think I have around about 9.5 to 10 pips stop, probably around about 10 to be quite fair. And that's the current position. So it is what it is at the moment. EG, or take a look at the spreads later on, depending on whether it might serve me right just to close that out. at a loss, as opposing to waiting up until around about 2300 my time in 2 hours, widen up my stops for the spreads to take place, and then putting my stop loss back to where it should be. I'll debate it. We'll come to that bridge when we cross it, or when we need to cross it. But nevertheless, so that's sort of the worst case scenario today. But what I am happy to do is go now through, what else was I looking at? Well, let's talk about GCAD. So GCAD, a pair that I was scoping pretty much all day. As you can see here by my illustrations, I was waiting for a break of structure, pull back into an area of imbalance before looking to take that position. I didn't see a break of structure in terms of being aggressive for me to take sooner rather than later. However, what I must say is, right, I'm definitely back now. So GBP CAD, I was having the explanation just prior to the little pause that I was looking to take this pretty much all day. However, the setup aligned, but as a result of really price reaching where I'd like to, in an ideal scenario, manage that position, i.e. that daily 50 MA. So let me enlarge the chart so you'll understand exactly why the bit of concern. So although we're trading via the daily order block, I also must understand that the previous daily candle closed below that daily 50 MA. So bring your attention here to the bottom right hand chart. Now, as a result of that previous candle closing below the 50 MA, using my strategy, I now have every reason to believe that price may look to go above that daily 50 MA on the lower time frame. However, it's very important that I stick to my strategy and what I believe. I believe that this current daily candle will close below that daily 50 MA. Therefore, the moment I've seen price tip above that daily 50 MA, in my opinion, that could be the daily candle already making its high, leaving me with no real leverage, or if I can say liquidity towards the upside, to potentially drive further. Of course, my theory is not bulletproof. I'm not 100% correct all of the time. And the next daily candle could indeed close bullish above, or this current daily candle could indeed close bullish above that daily 50 MA. However, what I'll explain to you guys on the next pair is how I use that 50 MA, and I use it very consistently. And the daily 50 MA is a very, well, I use it as a very strong confluence for my position. It would be quite the opposite. Yesterday, for example, when I was looking to take a GCAD long, let me just check my journal. In fact, I think it was a GCAD long that I took. Where are we? Exactly. So yesterday, GCAD long at 1650, and that ended out break even. But the difference with that GCAD long is the previous daily candle closed bearish above that daily 50 MA. So whilst this previous daily candle, now the candle that I was trading yesterday, whilst that was trending below, I had every reason to believe that that current daily candle, i.e. yesterday's daily candle, would look to close again above that daily 50 MA. It did its utmost, but I must use the fact of the matter. And the fact of the matter is it didn't close above. It closed very close to it, and it almost served its purpose very well, that daily 50 MA. However, in terms of my trade now that I was looking to take, as I said, as soon as price broke up a little bit too far, in my opinion, tapped above that daily 50 MA, and now as it come back, I wasn't then willing to take it. However, the reason why I wasn't willing to take that is I was forecasting pound weakness as a result of dollar strength. So that takes me on to the next pair, GBP USD. Again, I was looking to take shorts from this also. However, I had my setup, but my entry criteria didn't show, so I wasn't able to take it. Perhaps if I didn't take my US dollar CAD longs, there could well have been an opportunity that I could have taken just here on the retest after that snap, which would have been a very nice trade. However, my stop loss placement, if I show you guys now, it would have been a little bit too big for my liking, knowing that the 4-hour 50 EMA is where price was looking to reject. I would then be trending back down into that 4-hour 50 EMA within the same 4-hour candle whereby price has already rejected it. So it wasn't looking good to take this short position. However, what I did take was US dollar CAD longs. That's a combination of understanding what was going on with the DXY. The DXY, of course, had its first clue that I wrote in this morning by way of illustration. After that higher high break on the 15-minute, I was still looking and hoping for a break above this area on that 4-hour time frame. We got it eventually, however, for me, that was the true sign that the DXY is now looking to go long. So as a result of understanding longer term now, I could well be playing into my higher time frame forecast, whereby I'm expecting on that weekly time frame for price to look to want to reject that weekly order block. Refine within that area is the daily, and now we are just here in all of that refinement, looking for price to obviously break an area pullback and then go. Potentially tomorrow we'll have the pullback before price will start to trend up towards the end of the week. Hopefully candles start to break and close above that 4-hour 50 EMA, meaning that we're no longer rejecting that 4-hour 50 EMA as we did on the last 4-hour candle, but in fact we'll be using it as more of a confluence as price would close above, and then we'd be looking for the pullback potentially into the 4-hour 50 mil just below it, any liquidity that I can find perhaps tomorrow morning by way of order block refinement to then take price back up to the highs. So using all of that information, I've then gone on to the lower time frames to understand where is it likely that price could want to reject from on that 15-minute time frame, recognizing that there were some order blocks available as price started to make a beautiful trend towards the upside by way of, let's call it higher high, higher low, higher high created, expecting price to want to come back down into these areas before making a higher high. I then went over to US dollar CAD to understand is now potentially the correct time for US dollar CAD to go long. So the first thing I need to understand is, does US dollar CAD actually provide me with a setup first and foremost? What you'll find is this hasn't moved from the morning, I don't believe. Well, let's double check. US dollar CAD. Where are we in terms of forecasts? US dollar CAD. Here we are. 13 hours ago, US dollar CAD. Break above, pull back, off we go. Live market analysis, break above, pull back, off we go. So pretty much trading directly in line with my forecast, as I always do my absolute best to do. And the setup, again, understanding, is there a point of interest that would allow me to take that position long? So the first thing that I'm always reluctant to do, in fact I never do it, is use an order block in the middle of Asia when Asia hasn't been filled, because my theory also, I understand that Asia highs are looking to be filled within a trading day, and also Asia lows are going to be looking to be filled within a trading day. So although there wasn't any other 15-minute order blocks in this leg, I couldn't use this order block, which made my life a lot easier. When I start to use top-down analysis and have the refinement of this weekly order block that you see here, also in line with the DXY looking to take price higher, refined down, we can see we're right at the lows of that weekly order block on the 4-hour time frame. And once that is refined down, we can see just perfectly, if I start to bring that across, why I should be looking for a potential position from that area. If you call it the most basic form of price action, higher highs, higher lows, higher highs, higher lows, higher highs. So as a result of price now coming back down to that 15-minute order block, this is a position in the market where I need to be looking for a potential entry. So I won't bore you with my entry model, but you can first of all see a session low in the market by way of order block that was mitigated, and as you start to go through all the top, you can understand that it is absolutely a session low in the market where price is continuing to make those highs away from price action, but price is failing to actually make any lows below. Therefore, in my opinion, again, as I've explained previously on another pair, looking to understand where is price looking to gravitate towards. Once we've got the refinement, we can then understand why this is the 15-minute order block. That makes a tremendous amount of sense. Then once price came into this area, it's very easy for me, just set a 15-minute timer if I must, wait for that 15-minute candle to close on the quarter, and then look for my entry criteria. This entry criteria was a 5-minute entry by way of imbalance, as you can see just here. And as price went up, broke the 1-minute time frame, came back down, and I took the position just as price wicked right back into that imbalance area, and I took the long. So reasons now why I am out of that long position on, well, I traded variations of accounts. My main account, this position is most certainly closed, and I can tell you absolutely why. Price came into the 4-hour 50 EMA. Very, very important, as I've already spoken about the 4-hour 50 EMA. Of course, I would love for price to smash above it and keep on printing those bullish candles. However, what I must understand is that I'm using the 4-hour 50 EMA either as a target or a management area. And as you can see, price on that 4-hour time frame is respecting the 4-hour 50 EMA beautifully. Even a couple of weeks back, we can see price trending above, wicking at that 4-hour 50 EMA, off it goes, making higher highs. So now as price is now in the downtrend, why should I also not believe much of the same, that once price comes into that 4-hour 50 EMA, of course on the lower time frames we're going to get a wick to the high potentially. It happens a lot. However, I must still stick to my belief that price is going to want to reject that 4-hour 50 EMA, and it would make absolute sense. We've already done the forecast of what we're expecting. We've broken out of that range. Now we're looking for price to come back. Why does price have a reason to come back? Well, it's hit the 4-hour 50 EMA, allow price to come back down, build up the liquidity down at those lows before making after that higher high for the higher low, higher high continuation of what I'm expecting throughout the rest of the week. So that's the roundup, to be honest, ladies and gents. So I am out of US dollar CAD at 1 to 3.5. I think 6 o'clock was when I closed that position based on the EMA on the DXY. So around about 3%, give or take. So that's the current position on US dollar CAD. On another account, I am just leaving that to see where it goes. However, by the time price gets to around 11 o'clock my time, I'm probably just going to close it out, as I'm more than likely not going to be awake, and I don't want to be managing my stop loss throughout the crossover. So that's the roundup, to be honest, ladies and gents. I will get on the journal of these trades now, clear the charts, ready for another trading day tomorrow. So thank you very much, as always, for your attention. I appreciate your support across all the channels, and I hope the little breakdowns here and there give you a nice helping hand in terms of your trading journey. All the very best until the next video. Do take care, everyone. That's Charles.